The only thing keeping Russia alive in the Ukraine war is oil. Tax revenue from this valuable product has sustained Putin's invasion. But as sanctions weighed down, the question soon became for how long? Not much longer. Without firing a shot, the US screwed Russia by removing the last thing keeping Putin's ambitions of empire alive. And now we're starting to see the effects slowly destroy Russia. Before we explain what is happening to Russia's oil right now, we need to take you back in time. Not too far, thankfully. We're heading back to the end of October 2025, which is when US President Donald Trump announced a raft of new sanctions targeting two of Russia's major oil companies, Lukoil and Rosneft. The sanctions came in the wake of yet another round of failed peace talks with Putin, and they amounted to the US putting its foot down and telling Putin that it would hit Russia hard if Putin didn't start taking peace talks seriously. These were tough measures. However, Putin may not have realized the full extent of the ripple effect. The US threw a boulder into the Russian Ocean, and it's created a series of tidal waves that are now destroying Russian oil. However, the initial effects were nothing to sneeze at. Lukoil, in particular, took the new US sanctions like an uppercut to the chin from Prime Mike Tyson. Just a week after Trump made his announcement, Lukoil told the world that it was at panic stations, as it announced that it would sell off its international assets to the highest bidder if it wasn't granted some kind of relief from the pressure that Trump had just put on the company. Keep that sale in mind. It's going to be very important soon. By October 27th, Lukoil was already fielding bidders, perhaps prompted by the UK following America's lead with its own sanctions. Foreign holdings would have to go, and there were plenty to go around. In Iraq, Lukoil owned a 75% stake in the West Kurna 2 oil field, which produced around 480,000 barrels per day and is one of the world's largest oil fields. The Neftochim Burgas refinery in Bulgaria is another asset that Lukoil might have to ship to stop the bleeding the sanctions were causing, as well as the petrol refinery in Romania. These are major investments for a company that produces about 2% of the world's oil, and Trump made them unviable in October 2025. Fast forward to the present, and a move that initially sparked panic among Russia's major oil companies has now started to have some drastic effects, both on Lukoil and Russia itself. We'll cover what's happening to Russia as a whole in a few minutes, but for Lukoil, the proposed sales are done, and you'll never guess who the buyers are: the United States. That's according to Newsweek, which reported on January 29th that Lukoil had agreed to sell its foreign assets to a US investment firm in a deal believed to be worth about $22 billion. This is no standard sale. What it means is that Lukoil is getting rid of assets that were generating revenue before Trump made his big sanctions decision. Putin, every ruble of oil sold by a Russian company is a ruble that he can tax to keep money flowing into the Russian war chest. So any sale like that one that Lukoil has just agreed to is sure to deliver a massive economic blow to Russia, in addition to crippling Lukoil in terms of it being a true global player in the oil sector. Newsweek doesn't report which of Lukoil's international assets are being sold to the US investment group, though it's very possible that it's all of them. The assets that we mentioned a little earlier in the video would be gone in this scenario. So too with the 200 gas stations that Lukoil owns, which are spread across the American states of Pennsylvania, New Jersey, and New York. The same may go for any gas stations that it owns in countries other than Russia, along with refineries and upstream oil assets that Lukoil holds in territories other than its homeland. It's worth pointing out that there is a major difference between Lukoil and the other oil company that Trump targeted with his oil sanctions, Rosneft. The latter is a state-owned enterprise, which, though it comes with its own problems, does at least mean it can be shielded from the worst economic effects of sanctions. Lukoil, on the other hand, is privately owned, which is what allowed it to develop such an impressive portfolio of international assets in the first place. Russia benefited from those assets. Lukoil's international assets generated a steady stream of revenue for Russia that, crucially, came from territories other than Russia. That's vital for a country that has seen cash from overseas investments practically dry up in the wake of Putin's invasion of Ukraine, making it fair to say that the assets that Lukoil just sold represented something of a lifeline for Putin. With those assets now in the hands of a US investment firm, that lifeline has been severed, and the precious oil that is spilling is going to support somebody other than Putin. After all, the Kremlin can't tax income that is no longer coming into the country. Lukoil's sale of its assets could have just blown a multi-billion-dollar hole into Russia's war budget. For Lukoil, the sale is little more than a band-aid when it's bleeding out. While the injection of $22 billion into the company is much needed, Lukoil faces other problems related to the sharp discounts that it's having to place on each barrel of oil that it sells to countries that are happily bending the company over those barrels as they take advantage of the impact that the Western sanctions have had. Lukoil is hurting from these discounts so much that just days before it announced its sale of its overseas assets, the company's head honchos went crawling to the Kremlin with their cap in hands, begging the government for some sort of tax relief due to the discounts it's now forced to offer as the sharp price decline in Russian crude led to it trading at about 50% of global benchmarks. According to the Moscow Times, Lukoil is looking to the Kremlin to change the fuel price damper mechanism that Russia has in place. This damper, which was introduced back in 2018, compensates Russia's oil companies when domestic fuel prices fall below international levels. The trade-off is that companies have to make additional payments to the state when domestic prices rise above international levels. The latter is what Lukoil is having to do now, which is what worries them. It's asking for the discount applied to Russian crude for tax purposes to be capped at between $10 and $15 per barrel. Right now, those discount caps exceed $20, which means Lukoil will be among the Russian oil companies that have to pay around $170 million into Russia's annual budget in December as part of the damper mechanism. The number is even higher than that when you take January into account. According to United 24 Media, Russia's oil companies are likely to transfer $616 million to the Russian state budget for the period spanning December to January. For context, these same companies collectively received $23 billion from Russia under the damper mechanism in 2023 and a further $11.5 billion in 2024. So just to be clear, Lukoil wants Putin to extract less money from Russia's oil industry at a time when Putin is bleeding Russia dry of every ruble he can get his hands on to fund his war. Something tells us that there's no chance of this happening. By the way, Rosneft isn't exactly doing great. Though being state-owned insulates the company from the sorts of struggles that Lukoil is experiencing with international assets, Rosneft's profits are declining rapidly. In December 2025, UNN reported that the first 9 months of 2025 saw Rosneft's profits collapse by about 70%. Bear in mind that this was before Trump implemented his sanctions, so it's very possible that Rosneft is struggling even more as we head deeper into 2026, and we just haven't heard about it yet. The Kremlin is trying to give Rosneft a helping hand, as it has announced 10 billion rubles of tax relief for the company that will be paid out annually between 2026 and 2030. But that only works out to about $133 million per year. It's still money that Rosneft only seems to be getting because it's state-owned. Still, the cracks are definitely starting to show in Russia's oil giants, and we can say the same for Russia itself. But before we go deeper into Russia's problems, this is a quick reminder that you're watching The Military Show. If you haven't subscribed yet, now is the time. Let's get back to what's happening with Russia. As we mentioned earlier in the video, the impact of Trump's October sanctions is having a massive ripple effect. We've just learned what that effect has been and continues to be for Lukoil. However, Russia is also dealing with a ton of new problems brought on by these sanctions, especially when Trump's sanctions are combined with the many that came before. Take tax revenue, for instance. It's way down. On January 19th, Reuters reported that its calculations show that Russia's federal budget proceeds from the tax that it generates on the sale of gas and oil are likely to decline by 46% in January when compared to the same month in 2025. Russia will still be pulling in a lot of money for Putin's war. About $5.41 billion will be poured into the war chest. However, this figure is the lowest that Russia has generated from taxing two of its most valuable assets since August 2020. If you need a reminder, that's smack bang in the middle of the initial stages of the COVID-19 pandemic, when people were being forced to stay indoors and demand for fuel was at a low. Worse yet for the Kremlin, this decline came on the back of a 2025 that also saw Russia's federal budget revenues drop to the lowest they've been since 2020. The tax revenue gain from oil and gas dropped by 24% compared to 2024. Again, Russia still generated a lot of money from its oil and gas, about $112.6 billion in fact, but that's 24% less than the year before. And January seeing yet another decline means that the revenues keep going down. Cut after cut is being inflicted on Russia, and what we're now seeing is the beginning stages of it bleeding out. If current trends continue, Russia's 2026 oil and gas tax revenue will be lower than it was in 2025, and so on and so on. Eventually, there will be very little left. Newsweek also raises a very interesting point that demonstrates how Russia's oil woes will extend long after the Ukraine war is over. In wartime, Russia has compensated with high defense spending, taxes, and heavy borrowing. However, when the war eventually ends, the country will face huge rebuilding costs and pressure to address living standards, the outlet reports. In other words, the smokescreen that has engulfed Russia's finances is already evaporating. When the war ends, Putin's public is going to need the investment that he denied them for the last 4 years, and the money simply isn't going to be there to fund a rebuilding effort that Russia never thought it would have to face. Beyond taxation, Russia has another problem with US and other Western sanctions. they're forcing the country's oil companies to sell their products at steep discounts. Obviously, this has an impact on the taxation issues we've already discussed. Russia gets less tax revenue from a barrel of oil that sells at $80 than it does at $50, for instance. But right now, Putin would absolutely kill for either of those numbers, as the discounts that Russia is having to offer are far steeper. India's refineries, at least those still buying from Russia, are making out like bandits. That's according to a January 29th article by United 24 Media, which says that Russia is being forced to sell its oil for as little as $22 per barrel to Indian buyers, being wary of US sanctions. It's gotten to the point where some of the country's refineries are actively refusing to buy Russian oil at all, which is what is forcing Russia to offer unprecedented price cuts. For context, the last time the average price for a barrel of oil dropped to that sort of level was during the COVID-19 pandemic. Macro Trends reports that April 2020 saw the average price hit $19.23 per barrel from previous prices that were in the $40 to $50 range. But that was an extreme circumstance. Before that, oil hadn't consistently cost in the $20 per barrel range since the early 2000s. So that's over 20 years of inflation out of the window for Russia, as it's getting as much from India for a barrel of oil as it did when Putin first took charge of the country. The Financial Times adds that prices being in the $22 range means that Russia is barely breaking even on each barrel that it sells, which again comes back to the tax issue. What can you tax when no money is being made? As one former senior energy executive told the Financial Times, if they, the US, ramp up the sanctions anymore, the only way we're going to be selling any oil is by pipeline. We know that Putin wants to return Russia to how it was, but maybe this is just taking things a little bit too far. If we go back to when Trump implemented the US sanctions against Lukoil and Rosneft, we see that the India problem started for Russia about a month after that announcement. In November, Reliance Industries, which is one of India's largest conglomerates, announced that it had stopped importing Russia's crude oil for its export-only refining unit in Gujarat. This transition has been completed ahead of schedule to enforce full compliance with product import restrictions coming into force on January 21, 2026, Reliance Industries said in a press release that basically translates to, "The US made us do it." Reliance has slashed imports even further, as oilprice.com reported on January 29th. The company has halted all purchases of sanctioned oil from Russia, which severely limits which Russian companies can sell to Reliance. What this means is that Reliance will only buy limited volumes of crude from Russia, with that crude oil being subject to price caps, which in turn can lead to the sorts of discounts that United 24 Media mentions. For an extra heaping of salt into that particular wound, India's oil minister Hardeep Puri announced in January that India's oil imports from Russia had fallen to 1.3 million barrels per day from 1.8 million barrels. Even with the discounted pricing, that's $11 million of daily purchases wiped out, which adds up to a little over $4 billion in yearly revenue that Putin can't tax. This is all thanks to US sanctions. And it seems likely that things will only get worse for Russia, especially if a new US secondary sanction bill that proposes levying 500% tariffs against any country that buys Russian oil makes it into law. By the way, it's not as if Russia's unsanctioned oil is making a ton of money that Putin can tax for the Ukraine war either. According to United 24 Media, the average export price for a barrel of Urals crude oil, which is the type of crude that Russia predominantly sells, dropped to as low as $39 per barrel in December. We'll give you 3 guesses of what we're about to say next. That's the lowest it's been since the COVID-19 pandemic. Right now, Russia's version of normal is putting itself in the same state as it was when an unknown disease was causing every country on the planet to panic. Putin's leadership has led to this, and it's only going to get worse. January saw average Urals crude prices decline to as low as $34 per barrel. And though they recovered by the end of the month, the range between $36 and $38 that a barrel sells for now is still lower than it was in December. 2025 has already seen things get worse for Russia's oil. As the Financial Times points out, the discount per barrel on Urals crude hit $24 in November. That amounts to the difference in sale price between a barrel of Urals crude and Brent crude. Sanctions make such discounts inevitable. But in 2024 and 23, the discount was only $15, so sanctions pressure clearly has had an effect, and it's going to continue to do so. Ironically, the one aspect of Russia's economy that is getting stronger is also feeding into all of these oil problems. Right now, the value of the ruble is 17% higher than the 92 rubles per $1 rate that Russia assumed for its national budget. This means that Russia is generating fewer rubles for every dollar that it earns from its oil sales. The Financial Times explains what this means, stating, "A $10 deviation in the average Urals price from the budget assumption would wipe out 1.5 to 1.8 trillion rubles in revenues," wrote analysts at Alfa Bank, Russia's largest private lender. 1.8 trillion rubles is about $23.9 billion, yet more money that Putin won't be able to tax. We've thrown a lot of numbers at you in this video, but we have a few more that only go to emphasize how bad Russia's oil situation is. Compounding all of these problems with oil companies selling assets, oil being sold at massive discounts, and the strong ruble biting Putin in the backside is production. As United 24 media reported on January 23rd, Russia's oil production amounted to 512 million tons, which marks the fourth consecutive year of declines. In 2024, Russia produced 516 million tons of oil. It was 530 million tons, and it was 535 million tons in 2022. Russian oil production hasn't been as low as it was in 2025 since 2009. So what do we see here? The simple answer is that Russia's oil sector is sliding into a crisis. Everything we've talked about here, from the sale of assets to the US to the lower volumes of oil that Russia is producing, adds up to one thing for Putin: less oil revenue for the Kremlin to tax. Putin's weak spot has been found, or perhaps more accurately, that weak spot was always known. Only now, the US is plunging knife after knife into the perfect spot with every sanction that it implements. Russia's oil industry won't collapse today, it won't even collapse tomorrow, but eventually all of these wounds will take their toll, and Putin will be left with the tattered remnants of an economy that he butchered just so he could fail to defeat Ukraine. To hammer the point home, Russia's economy is already so in the doldrums that Ukraine has managed to pull off something so impossible that you'll think it's fake. Here's a hint: it has something to do with economic growth or lack thereof. If you want to find out more, check out our video. And if you enjoyed this video, make sure to subscribe to The Military Show so you don't miss out on what comes next as Russia stumbles from failure to failure. And thank you, as always, for watching.